All right, I think we've got everyone in. Okay, well, welcome to another Learn It Live webinar with Tyrone and Thomas from FX Evolution. As always, my name's Thomas Atkinson. I'm joined with Tyrone.
Hi everyone, and welcome to tonight's episode. It's scalping the markets. So everyone loves a bit of a scalp, and we're going to talk about what's happening in the markets right now and how best to approach this topic.
Yeah, definitely. I think scalping is one of our most popular kind of webinar series, and for good reason. It's something that got us into trading, and I know it gets everyone very excited. So we're going to talk about a couple of scalping types of systems tonight, and we're also going to be taking a look at our last webinar and some of the results and what we were kind of seeing last time and what did happen and transpire in the market. So I think it's a really good time in the market at the moment. We've got a lot of movement, a lot of volatility. As especially scalpers or any type of trader, we kind of love volatility because it creates opportunity, especially in Forex trading. So just a bit of housekeeping as usual. We wanted to just let you know that the information provided in these videos has been produced by a third party and does not reflect the opinion of Pepperstone. The information has been provided without any alteration or verification. So what are we going to be covering today? So we're going to be taking a look at the types of scalping strategies and how to choose a suitable strategy for you. We're going to be looking at essential tips and tricks to pay attention to when scalping and how to lower your risks and maximize your returns when scalping. So that's probably one of the most important ones for us, because when we're scalping, we are going to be taking more trades. And because we're taking more trades, we potentially could have a massive blowout or mistake due to the fact that we're only looking for a small movement. So I think that's probably caught a few traders in the room right now. It does catch you sometimes, and sometimes you accidentally don't have a stop loss in, and all too fast things can go very badly, can't they, Ty?
Oh, they can. It can happen in an instant.
Yeah, and then you're looking at your account going, oh no, what have I done? And we don't want to be in that situation. So we'll talk about how to potentially minimize those risks and where we can place our stop losses tonight. So what is scalping really? So scalping is basically a trading style which we specialize in taking profits on small price changes. Generally, you'll see people talk about scalping on things like 1 minute, 5 minute, 15-minute, maybe up to hour charts, because we want to be in a trade for potentially just the trading session that we're looking at. And that session may only be 1 to 4 hours in front of the charts. So therefore, we're looking for that quick scalpel-like entry, and we're looking for that quick take profit zone. It's important to note that this type of trading is really time intensive. So if you and it's chart intensive, so we're always going to need to be in front of the charts to potentially manage our scalping trades. So if you're time poor and you do have a full-time job, scalping could make up a good part of your strategy overall, but it may not be great if you're not prepared to put in those amount of hours. We generally find actually some of the best times to scalp are market opens. So anyone that's joining us from London, obviously London just opened, and that is a great time to trade, isn't it, Ty? It's something we definitely started with.
It is. It's certainly the most volatile probably time in the whole day, really, the whole trading day. You can definitely get some positive moves when you get the right trades around the London European Opens. And it really continues on until the New York Open, which gets a little bit volatile again. So, yeah, definitely good trading environments throughout those sessions.
Yeah, I think that's something we cut our teeth with. We're obviously Australian. We come from Australia, and one thing for us was when we first started, we had full-time jobs. We'd come home, and London Open would be perfectly timed for us because we just finished. It was 5 p.m. or 6 p.m. depending on daylight savings times, or even 7, and we could trade for quite a few hours at night and get that nice volatile time for scalping. So not a bad time to look at if you haven't started scalping yet in your trading systems. So another thing with scalping is we're going to have more transactions, but often we'll have higher fluctuations in our account balances. It's very important to think about this from our psychology. I see a lot of traders, what they'll do is they'll have 4 to 5 wins in a row. They'll get very confident in their trading system, and then they'll have 4 to 5 losses in a row, and they'll get incredibly unconfident in their trading system, and then they'll just drop their trading system. And the problem with that is that when you're scalping, you're going to see a lot more trades. And even if you have a 75% winning strategy, that still could technically have 5 or 6 losses in a row. And that hurts our psychology, and therefore we might go and we get a new system and we keep trying different systems. And again, I think a lot of people find that out there, and that is a big problem. So I think, how many times do we see this, Ty? I mean, time and time again, even ourselves.
It happens. It does happen a lot, and the thing is, I think people associate scalping with more of a gambling mentality than trading. But look, at the end of the day, scalping has to be treated exactly like you would trade a normal swing trade or even a long-term trade. The trade has to be there, and it's not a gamble. It never is. So all the rules that we would usually use for swing trading have to be applied for scalping, just to a smaller time frame.
So you also need, along with that, discipline, and you need a strict entry and exit strategy. And again, that's just so that we don't blow accounts, we don't make bad mistakes that we regret later on. So step one when it comes to scalping is, are we going to use scalping as our primary or as a supplementary style? So primary style scalpers will often need to spend the potentially hours in front of the charts multiple days per week. The other opportunity we have is to use a supplementary style scalping trading system, where we may recognize favorable market conditions and adapt our trading style to take advantage of these situations. This is probably one that we love at FX Evolution, because when we're able to see and a market maybe being range bound or not that much movement in terms of the trend trading that we like to do on swing or day trading, then we can come back down and we can start scalping the market a little bit more and take advantage of the smaller moves inside of the 15-minute, 5-minute, 1-hour charts. So we love supplementary style scalping, and that's just because we love having a lot of different trading systems in our trading arsenal, so we can use those depending on the time of year. Because a lot of people don't realize, but the market just doesn't trend all of the time, does it, Ty? Just doesn't trend all of the time.
No, absolutely not. And the thing is, when one big time frame is actually trending, you've got many underneath it that are going a little bit sideways or potentially counter trending the big prevailing trend. So what that does give you is many opportunities to get into the market in those little moves where you may have a daily or a 4-hour heading in the direction of a swing trade that you've got. And you've got many scalping opportunities, because one of the smaller time frames could well be going sideways for a particular period of time. So it gives you a bias, but it also gives you plenty of other trading opportunities while you wait for the big setups.
So just with step 2 here quickly, and we'll jump into the charts right after this, is market conditions. So is the market range bound or trending on the larger time frames? We need to know that before we consider scalping potentially the smaller time frames. Really important to do that. A lot of scalpers ignore what's happening on the daily time frames, and that's a bit of a mistake, because the big money is being traded on those decisions. When you're scalping, you're really kind of looking for those quick entries, but you're also competing a little bit with algorithms on the smaller time frames. So things like robots or expert advisors, they do run on the 5, 15-minute, 30-minute charts. So we need to make sure we know what's happening on the larger time frames, draw our support resistances, have a good levels and good key areas that we're looking for, and then we can come back down to the smaller time frames. Do also remember that we aren't a big fan of the 1-minute chart for scalping. A lot of people are going to say 1 minute's where it's at. The problem we have with that is that I don't think that many hand traders can actually see the 1-minute charts, and they don't look at it on a big term basis. I think that your statistics, or we think your statistics in terms of trading, will be a lot higher when you start to move to the 5, 15, 30 and 1-hour charts. And you can still be in and out within 20 minutes or 30 minutes, not very long period of time, potentially 5 minutes even. And then of course, we want to spend time learning the way the market moves. So if you want to be an expert at anything in life, you need to put the time in. And I actually suggest London Open if you're from Australia or you're from London or Europe. It's a great time for you to be able to hone in your scalping systems, and I actually think it's one of the best times of the day, so it's a great place to start. So we're doing something a little bit different this week. We'd like to take a look at the market overview and have a look at what we did 2 weeks ago in the webinars and how those things played out in terms of how those trades played out. So let's just quickly jump in And we're going to jump into just the euro very, very quickly. One thing we mentioned 2 weeks ago is we were talking about this shooting star candle here on the euro, and we were talking about this coming off the role reversal area over here, and how we started to think that this looked like a head and shoulders pattern. So we had our left shoulder, our head, and our right shoulder. So the sell-off did continue, and we did mention that we thought there was going to be some support here, and there was going to be some support at this level. So that was quite a successful trade. You can go back and have a look at that webinar. It should be on the Pepperstone videos, I think, on YouTube. So go check that out. But that was quite successful there. Another one we were looking at, a little bit different, was the US dollar yen. We were looking at this engulfing candle here. And we were basically looking at buying this with the idea of it going back up into these highs. It hasn't quite reached that yet, but it definitely is on the movement up. And some people may have been stopped out by this move here, and that was because of that volatility. But again, the idea behind these trades is you had the engulf. We're looking for that long-term upside potential. We are looking for a lot of profit, so our stop loss could be quite large. And I think this nice big bullish candle over here is kind of confirmed that we're back into the uptrend, at least on the daily here on the US dollar yen. So another quite successful little trading setup there. And I think the last ones, or the last two we were looking at, one of them was the potential breakout of gold. That did happen due to that volatility. And our idea behind this gold was to take it into the previous kind of role reversal area. And I think this is just a great one. Whether you're scalping or you're doing swing trading or day trading, look for role reversal areas. And what we mean by role reversal is we're looking for previous support areas becoming resistance areas. And you can see here that when gold broke through, the most obvious level for us where it was going to be taken to was going to be to that role reversal area. And that doubled up with our analysis that we were looking at this channel area here, and we were saying, okay, if this did break, where do we think it's going? And in this case, we thought it was going to the role reversal area. And this is what we call double confirmation. And again, it can be used in scalping. If this was a 5-minute or 15-minute chart, the exact same concepts apply, don't they, Ty?
They absolutely do.
Yeah, and it's something that we look for a lot as traders. When we see double confirmation, it's like Christmas came early. It's the kind of thing that we say, wow, great looking trade. The market's obviously planning for it. That's what we want to see. And you can see that the buyers would have taken off profit here, and the rest is all the way back down to this level. So actually, in terms of scalping, what we'd be looking for right now is potentially another role reversal area. So even though this is a daily time frame, you can see here it's coming back into these previous highs. So we could then jump down into the 1 hour timeframes or even the 5-minute timeframes, and we could be looking for the market to retest this level, potentially make maybe something we're going to talk about soon, a double bottom pattern over here. And if that happened and broke up, we could start to get involved in the scalping of that opportunity. So something like that, and we'll bring this back in about 10 minutes, could be something that we would plan on for a scalping opportunity sometime in the future. I think the only other one to look at would be the Aussie dollar. And I think we had one of the students send in, or one of the traders send in, his plans for this particular pair. And he was talking about it selling off from these levels up here. And of course it did do so. And his idea was to take profit around this point here. He was selling around here at this 0.7240 area. And that was quite a successful trade that came in quite quickly. So quite a few good trades. Turned out they were all successful. But again, they're not always going to be like that. It just turned out that those ones were an exceptional trading opportunity 2 weeks ago.
They were very, very good setup, so it made it fairly easy for some of those to work out. But again, yeah, they were all part of a bigger swing trading plan. So that's what we're going to focus on tonight.
We are, yes. So let's just go back into one of the concepts that we can apply to our scalping trading systems. So like what we teach with all of our webinars, we really are a big fan of price action. We love indicators as well, but we love starting with price action. And we really like patterns because they show us the psychology of what the market is doing. If the market is range bound, it will often form something like a channel pattern here. And that gives us opportunity when it comes to scalping. We have two choices. One choice is to, every time it hits this resistance area, look for sells to sell it back down to the support area. And every time it hits the support area, look for buys to buy it into the resistance area. And that is one of the opportunities we have with the channel. But another opportunity we have is the channel break, similar to what we saw in that gold example, where it breaks out past the resistance or the support level. We look to potentially place a buy there. We place our stop loss, and then we can actually, because it's a pattern, take the distance of the channel and then work out where our take profit should be, which in this case is the length of the previous channel. And that often occurs. It's like that self-fulfilling prophecy. When the resistance is broken, it goes to the next area. And if this was a 5-minute chart or a 15-minute chart, the same principle applies. And we'll have a look at Euro live in the market right now, and we'll check out how this particular pattern is playing out right now. But I hope everyone can see that and can see these type of things appearing in the market, because if you form your base trading system off something like a channel, what you're doing is you're using price action, and that's the one lead indicator, isn't it, Ty?
Definitely, and especially it's never more important than to use and focus on price action when you are scalping, especially in the smaller time frames, because that's the here and the now. So yeah, of course, these channels are going to be dictated to by their depth as to what time frame you're on. So if this was a 5-minute chart, perhaps we could probably look for maybe an extension of maybe 10 or even 15 pips. That's all you could be getting from this channel. But if this was a 15-minute or a 30-minute chart, yeah, you might be open to 30 or 40 pips. So really, scalping, a lot of people ask, is scalping, predictable to only a certain amount of pips? So a lot of people consider, 3 or 4 pips to scalp. We call 3 or 4 pips a gamble, because that's not really what we're after. We leave that to the robots that are far better placed to be taking those sorts of moves. But to us, probably a minimum scalp for us would have to be somewhere between 10 or 15 pips to make it worthwhile. Because other than that, you're really just moving. You're just trying to move, with the market moves. That's not really trading. That's really just trying to extricate pips, which is not what that's not what real trading's about.
It isn't what real trading's about. And another thing is, if you are limiting yourself to only 5 pips or 6 pips take profit, the problem is then spread does come into it. Brokerage does come into your considerations then. And it really shouldn't in trading, because brokerage is a very small fee nowadays. I remember when we used to trade the pound odd on a Monday and it was 30 pip spread, that was crazy. But that's what it used to be. It was really insane how big the spread was. Nowadays, you're getting these, with Pepperstone's accounts, you're getting incredibly good spreads. So it's something where it shouldn't come into it. But if you are limiting yourself to only 4 or 5 pip kind of trades, it's still a portion or a percentage of that. Whereas if you have 10 to 15 pips, it really doesn't come into it that much, and therefore you actually have a lot more success with your trades as well. I love 10 to 15 pip trades. I'm not a big fan of 5 to 7, as Ty said. So our scalping method, 10 to 15, perfect, and we'll show you some examples of that in a minute. So hopefully everyone can see channels. We've covered it before, but it's a really good place to start with your scalps, because you have 2 trading systems inside it. You can bring in indicators. You can bring in things like stochastic, RSI, MACD when you're inside the channel. And when you break the channel, you can bring in things like roll reversal areas, kind of like what we're seeing on that gold, and other things like if we saw a hammer candle, which some of you will be familiar with, and the market's broken out high and it comes back down and it creates a hammer, we can start to add in things like Fibonacci and hammer candles. And it's all of these things together. The more reasons we have to be in the trade, the more successful the trade's going to be, and the more people that are going to trade it. So it's very exciting when you start to bring it all together. Well, at least I think so. Another pattern we want to talk about tonight in terms of scalping is double bottom and double top patterns. So one thing about double bottom and double top is they're often overlooked as being just a basic pattern, but when you bring them into things like role reversal areas, they can be incredibly powerful. Because what a double bottom really is telling us is that, let's say the market is selling off, maybe after a breakout or something like that, and it forms a base at the support, an intervening trough, another base, and then it breaks high. And this is that confirmation that we want in the market. And you'll hear us talk about confirmation so much in our webinars, because that's when the price action tells us that the market is ready to go to the next area. And the next area for a double bottom, similar to a channel, would be the distance of the trough or the low here to this intervening break, and we take that, it's called A here, and we then extrapolate that out, and that would become B. So the great thing about this kind of pattern trade is we know where our stop loss is going to be, we know where our take profit is going to be, and we've also got that confirmation that the market wants to go to the next level. And what do we say about confirmation, Ty? Every time.
Confirmation is king.
Confirmation is king. Can't say it better. A lot of people overlook that. And what we mean by confirmation is the candle on the time frame what we're looking at. If this is a 15-minute time frame, if the 15-minute candle has broken and closed above this point here, then that's the confirmation that we are ready to get involved in this trade. Not if it's come up, wicked, and closed back down. That is not confirmation. We need to see it close, because once it's closed, it's locked in time. No one can change anything that's happened in the market at that point. You can go back in history, you can see it, and you can't be saying, oh, I saw it there, but now it isn't there. And that happens a lot of times when you get into a trade a little bit early, get a little bit trigger happy, you press that buy or sell button 30 seconds before the candle closes, and then 30 seconds later, everything looks different, and you're suddenly hoping and praying that the trade comes back. So we don't want to be doing that. And by the way, I just want to mention, if anyone has questions, just ask them anytime in the chat, and Tyrone might be able to answer some, and we'll try to answer some near the end of this webinar. So let's just quickly jump into some of the smaller charts on the euro for what we've seen this week. And I really want to talk about this particular one, which actually just made profit there. So that was pretty good. But this particular trade here, was one where we were looking at the 15-minute chart and we kind of trapped price. So you'll notice here, kind of looks like a channel, yeah? So price all the way through the Asian session today was trapped between this 113.475 and this 113.40 area. And what we'll notice that's super important about this trade is that we had the wick break here on the 15-minute, and this was our signal that we don't want to use any smaller time frame than the 15-minute, because it did wick through, but then it came straight back down and closed underneath. And then we see here, look, if we keep following this 15-minute, we've got the wick down, we've got the wick down, but no body closes outside of that zone. Then we get our first body close to a new high. And this is the first time the body is closed ever before above this price here. And when that happened, that's basically our go signal. And what we can do is we can take the distance of this move in terms of the bodies to the bodies, and then we can work out where that's going to go, and then that would be where we'd want to take profit. So in this case, we're looking at around, if we pull it off this point here, around 8 pips. It's not ideal. We'd obviously love that 10 to 15, but you can see what we're looking at. But 8 pips happened very quickly, and our stop wouldn't have had to be very big either. So it's probably around a 1-to-1 type of trade. Another one that I wanted to point out, and this happened not that long ago either. Let's just bring it up. Sorry, it's on the 5-minute over here. Here we go. Was this one here. And a few people might know in the chat what kind of pattern this is. but this is actually an inverse head and shoulders. So we've got our left shoulder, our head, and our right shoulder on a 5-minute chart. So again, the pattern is showing on the scalping kind of time frames that we're looking at. And the great thing about a pattern like this, and some of the things that we can add to our scalping systems, is the pattern's there. That's perfect. But is the pattern telling us something that we're not seeing yet? Like what level is the pattern forming on? And in terms of the take profit, which would be the distance from the head to the intervening trough over here, or the neckline over here, where is that telling us that the market should go? So in this case, I quite like this trade because what the actual break is telling us is that it should go back up to kind of this supporty little area over here. And that makes sense because the market's saying, okay, we're not saying it's going, all the way up here. We're just saying that it's going back to a point that makes sense in the market. And sometimes this will be incredibly obviously clear and it will be a perfect role reversal area. And in this case, we're looking at around a 15 pip take profit, and our stop loss would be under this right shoulder. So a 9 to 10 pip stop loss. So that's pretty good because we're looking at a 1.5 to 1 style trade. If we took it with the break, which we always have to do because you've got to account for that, we'd be looking at a 12 pip stop for a 12 pip profit. And that's fine. 1 to 1, can't say anything about that. That's bad. Can you, Ty?
No, that's fine. Look, at the end of the day, if you're going to get that, 5 or 6 times in an afternoon, you're going to be pretty happy. You're not going to have to spend too much time in front of the charts. And as you start to get familiar with some of the pairs that you're looking at, you'll know what their average moves are per day as well. So you'll know what is capable of that pair, fairly quickly. And that it leads into a really easy way to identify if your take profit is actually a reasonable move for what that would normally do in a day or even an hour.
And it just means, like, I was just quickly measuring how many candles this took. So it took 33 5-minute candles, but that could actually happen in your trading session. As I said, 3 to 4 hours is definitely the time that we would recommend for scalping sessions. That's just because you need to give the market some time to form the patterns that you need to see. And it is about kind of being that patient hunter. You want to be patient. You want to find as many good trades as you need, but at the same time, you've got to wait for the good trades. You can't just sit there and say, I'll take everything. Because if you're just trading, in here, I'm going to buy, I'm going to sell, I'm going to buy, I'm going to sell, you'll probably end up losing. But if you wait for the patterns, if you wait for the price action, you will have a lot more success. I hope that makes sense to everybody, but it's definitely something that you look for. Let's jump straight back into the slides here quickly. Another thing that we always want to do is we want to look for popular things like popular moving averages. We've just got a few here that we love, which is the EMAs, the 5, the 8, the 21, the 55, and the 200 we've got there. All of these EMAs are just great with any type of scalping system. And the reason why is we know they're used. Some people might use 20, some people might use 50. 55, 21, doesn't really matter. They're very, very close. But this gives us an idea of the direction of the trend. So if you're not that great at being able to see the direction of the trend, maybe on the daily or the 4 hour, when we're doing that top-down approach to get into the scalping, then you might want to put on some of these moving averages. In particular, the 21 and the 55 would be a good place to start. I think Tyrone would agree with me on that one.
Yeah, we do like to stick to the Fibonacci numbers, but a lot of the blue and the red lines that we've seen on the charts that we've been using, we have actually changed them to 20 and 50 just for the ease of everybody watching. So so the red one's the 20 moving average and the blue one is the 50 moving average for anybody who is wanting to know the live ones that we're using on all of the time frames.
So step 3 it brings us to, and that is optimizing our entry. So we want to enter based on confirmation, not on gut feeling. Please never enter on gut feeling. We all do it. We all think, oh, I think it's going up. We train a lot of people that say that. We say, why are you entering? I saw that candle and I had this feeling that it was going up. It's not the way to treat a business. It's not the way to treat trading in the long term. And we've all been there, but we need to stop that. It's a really bad habit. We also don't want to break even trades with fixed pip amounts. We need to use percentages. What that means is if we're in a trade and we expect it to go 15 pips, we need to give the trade some form of breathing room. A lot of scalpers, what they'll do is they'll see it go up, we're going 15 pips, they'll see it go up 3.5 pips, and they'll go break even, break even, break even. The problem with that is the market, it does move quickly each way, and we've all been stopped out due to something like that. So it's better to break it down to percentages. If we expect 15 pips, then maybe you break even the trade somewhere around 75 or 66% of the way towards our take profit. So in that case, what about if it reached 10 pips? What a great place for us to break even it. So we just do it on percentages, so it's market adaptive. Often overlooked little hint, I guess, or tip. And I think Tyrone actually came up for that with that one for us. And we're never going back, that's for sure, are we, Ty? Absolutely never.
Never. It's certainly not a road you want to go down, and we want to avoid that at all costs.
I also hate the, the trailing stop. Not a big fan. Some people use it, maybe they use it effectively, but I love market adaptive systems. So if we've got a system that's based on the candles, based on the size, and it's always market adaptive, what a great way of trading. And again, we just want to, I guess, talk about again, spend time learning the way the market moves. Every currency is slightly different. So don't just go, I've mastered the euro and the pound US dollar, and therefore I'm going to trade the Norwegian kroner. Okay? It's not the same. We've made that mistake. A lot of people have made those mistakes. I remember the Mexican peso was one, yeah, Ty? Mexican Absolutely. Peso. I didn't realize the spread back there was about 25 pips on the Mexican peso either. But it's a thing where if you're trying to scalp, learn that particular currency, learn the way it moves, how it works during the time of day, and then how it also reacts to different news events. You'll need to start to recognize when you're scalping, red news matters. And what I mean by red news is if you've ever seen an economic calendar online, they'll categorize news in different colors. There'll be white news, there'll be yellow news. They might have different colors, but generally there'll be high impact news. And high impact news is not exactly a scalper's best friend because as scalpers, we generally want to be trading technically. We don't want to be trading fundamentally. Well, at least I don't think so, because you can get very big blowouts in your account and your stop may be hit very, very quickly, and it can ruin your psychology. Another concept's role reversal. Ty, do you want to break this one down for everybody?
Yeah, so we've talked about role reversal before in previous webinars, and we just want to highlight how important it is again, because there are a couple of good examples that we can see in the market starting to form or that have formed. So what we're looking for in a role reversal situation is an area on the chart where price has failed to break a certain level of resistance, like we can see here at the pink line, and then eventually after a couple of tests breaks through and does come back and actually retest it from the top end. So what we call this is a role reversal, because now we're expecting the same level that caused price an issue to actually get through is going to become support for any future touches in the shorter term. In a lot of ways, the role reversal is actually better than standard support, without the resistance being there previously, because that is a key zone that actually stopped price getting through there in the first place, which now will act as support. So it's almost like double confirmation that many people consider that area is important. So this support that we can see straight after resistance is often quite solid. And just as importantly, we can generally take the first touch of it without any other extra touch confirmation before we can regard it as a support zone.
Yeah, it's a great point. You can actually take this first little point that I've got the mouse over right now, because we know this was such an important level. Here it is just in the market. Obviously, it took a little bit longer, but even from a scalping side of things, this is a 4-hour chart. But what if we recognize this area and we start to jump into a 15-minute or a 5-minute chart at around this point? If we do that, then what we can do is we can start to look for little patterns around this point, maybe channels on the smaller time frame, maybe reversal candles, maybe just even all the indicators becoming oversold at this level, and we can start to scalp it. And we can scalp it where we're on the small time frame being really, really fast, but we know that the bigger traders are with us. So often overlooked, really often overlooked in the market. So think about that when you're bringing up your trading strategies. Another one, step 4, just quickly, target higher R multiples. And this just means that I think with scalping, sometimes people have 50 pip stop losses and 7 pip take profits. It's pretty hard to win long term if you do that. So try to aim for at least over 1-to-1 trades. And that means that if you're risking $100, you should try to make back at least $100 from your trade and not $50 or $30. Long-term statistics, you're probably not going to do that well doing that. Also, sometimes good-looking trades will not always meet your criteria. And what that means that because we're going to be waiting for things like confirmation, sometimes the confirmation, it shot through our channel, let's say it's given us the confirmation to go, but the take profit that we're looking for doesn't make sense. And in that case, what you might need to do is be patient and wait for the market to potentially turn around and come down and form that role reversal area. And if it does that, then we can potentially get involved. Another one, practice discipline. Discipline, very, very important in trading, as always. So let's just jump straight back into the market again, and we'll take a look at that gold trade from a scalping side of things, and we'll just jump on to the daily quickly here. The reason why I want to look at the daily is because what we have is we have this trade where the market may come down to this role reversal area. We've got those resistances that may become supports. So that's on the daily. Then we can come and have a look at the 4-hour, and we know that it's kind of not in that zone right now. But what if the market was here and we came in that day and we were looking at scalping it? This could be the opportunity that we're really looking for. So then we jump into the 15-minute charts and the 1-hour charts and those kind of things, and we basically be looking for things like the double bottom pattern, like the channel pattern. Tyrone, what else could we be looking for here?
Well, in this instance, we could be looking for the touches of the moving averages as a potential reversal zone, especially the 20. The 20 is definitely a key reversal for a downtrend, and if it comes up from above it, it can definitely be good support in an uptrend. So it's a definite key level. But also, we'll be looking for taking out the time frames and looking for potential support and resistance in front of where we're trading into. So if we actually take it out a little bit, Thomas has drawn up some lines here.
We'd like to take a look at that line.
We'll take it out a couple of time frames, and we'll know that these levels here are sitting right on top of the previous channel. So as you can see, any price movement down to that level would be a key either point to be taking profit or a potential entry point to go long. Now, we have had a question on this, why are we looking at the daily and the 4-hour when we're trying to scalp on a shorter time frame? And the short answer to that is actually for this very reason, to really understand where the support and resistance is on the bigger time frames and what direction the market is traveling in. Because of course, if you are trading in the direction of the prevailing trend, the magnitude of even the smaller moves are going to be greater than a counter trend into the prevailing trend's direction. So even though you're trading on a smaller time frame chart, it doesn't mean that you're not going to counter trend the bigger trend, but it's understanding that if you are counter trending the bigger trend, the magnitude of the move that you're looking for is not going to be as big as if it was in the direction of the trend.
The other thing that's important to look at these timeframes for, and why we always talk about it, is if we took gold for an example over here, the reason we're on the 4-hour and 1 hour or whatever time frame we are looking at is because then we can start to recognize these key resistance and support zones and jump into the smaller time frames. Like, this is going to be a great scalping opportunity. This is just, I know it's an excellent scalping opportunity based on this. So if we broke this one down, we know this support level is here on the 4-hour, but we can't trade the 4-hour. What we can do though, is we can jump into the smaller time frames and we can start to see, oh, well, look at this. We've got this strong resistance point through here on the 15-minute chart. When that resistance breaks, which it does here, we can start to get involved in the trade towards the long side and then start picking up those pips. And this is a little bit over, of course, the 15, but in this case, it could, scalping can still be 20, 30 pips for sure. You start to see this kind of stuff, you get involved in this trade, and you can see also the role reversal was here on the same time frame. So if we're jumping in at this time and we're looking for the scalps, and we've got plenty of different pairs that we're looking at, we've got a scalping opportunity here towards the buy. We've got a scalping opportunity here with the role reversal coming off this 15-minute channel. And that's two great trades. You're going to have high probability scalping. And that's what it's all about, high probability every time. So we do go from the higher time frames, but that's because we scalped at the lower time frames without looking at the higher time frames. And then we started to say, well, why don't we look at the higher time frames, bring it back down and start to recognize those key areas and then scalp the smaller time frames. And what was the success difference, Ty? It was huge.
Oh, the huge difference, because really what you're doing is actually giving yourself the overall picture of what the market is actually doing in that currency pair or whatever you're trading, whether it's an indice or even a stock. Because it's really, really important to understand the overall picture before you actually make any of the small initial moves. Remember that, when you're swing trading, ideally you don't want to be counter trending anything, but when you are scalping, most of the time you are going to find yourself counter trending at some point a bigger move. So understanding what that bigger move is really helps you scalp inside that with a smaller time frame. Now, to make that a little bit clearer, if we're seeing a setup on a daily or a 4-hour chart that we think is going in a particular direction, when we go back down to the 5-minute and 15-minute charts, it gives us the opportunity to scalp those moves into those zones that we're thinking. And this is what Thomas was referring to when he said that if you're using it as a supplementary type of trading strategy, it gives you the ability to scalp the moves before they actually either give you an entry point into a long swing trade or potentially go in the direction every time there is a smaller pullback. So the EMAs are very important on all time frames because they obviously adjust to the time frames as you change up and down. So a 20 EMA is going to look very different on a daily chart as it is on a 15-minute chart. But the importance and significance of the price action around it is the same, no matter which way you're looking at it.
So look, in these webinars, we only have time to cover some things, but I hope you can kind of see the way that channels can be used in your scalping systems. And remember, you can add in indicators. It's about how many reasons do we have to place the trades. So please look for role reversal, look for channels, look for double bottoms and double tops in your scalping systems and add them to your indicators, and you'll find them being quite successful trading methods. So if you have 4 or 5 reasons to be in, like a business plan, that's really excellent. And just speaking of business plan, we always want to create a trading system, and we love it with multiple entry criteria. So just as a quick example, a lot of people do this kind of thing. They points-base their trades. They get patterns, they're double top, double bottoms, channels, etc. There's some really great basic ones to start with. Support resistance zones, candle confirmations, Fibonacci retracements, even some indicators. So here you can just see that maybe for the trade that we want to place, we want to have 3 of the 4 reasons to be in, and therefore we need that minimum 75 points to trade. So something we've done with all of our trading and something that we teach in our courses is we always want to create a business plan for the trading strategy. We have our own one, it's called PRESIC, and that's based on price action, risk management, ELD, which is our own proprietary kind of multi-time frame stuff, chart patterns, indicators, and charting techniques. And we like to use one of every one of these letters when we're formulating our plan. We score it out of, out of a lot of points, and then we break it back down to 5-star, 4-star, 3-star trades. And if it's just not a 4 or 5-star trade, we just don't take it. So that's something that we do a lot. We always wanted to have this treat trading like a business philosophy, and when we started doing that, we had a lot more success, and that's the same for scalping. So just quickly, I'd just like to let everybody know that we will also be doing another webinar tomorrow night. So if you are interested, you can jump on fxevolution.com and you can check that out. You can just click on the webinars tab and you can visit us there. We'll be doing a little bit more purely market with probably not that much theory, but it'll give you a little bit of a different kind of way of looking at things. Might be doing a little bit of scalping as well with the patterns. So if you liked what you saw tonight, check that out. Another thing is, do we have any questions? Ty, did you field any questions? Or if you do have questions, ask them now because we'd love to answer them.
Yeah, guys, thank you. We have a couple interesting questions. The first one is, do you buy at a particular candle or you just buy at the break zone?
Okay, so we'll go back down to just the example of the euro. I think that's probably going to be a good one. All right, so if we're, let's say this head and shoulders pattern over here that we're all looking at. So in a head and shoulders, what we always want to be doing is we'll buy the close confirmation if the risk reward makes sense. So in this case, we know that the stop loss needs to be behind the right shoulder. And we also know that the take profit should be the head length to the neckline. So in this case, it made sense. And therefore we'll take that next candle. We'll just go straight into the market. The risk reward's over 1-to-1 or 1-to-1, perfect. Now, if the candle was higher up here and the risk reward didn't make sense, we would probably wait. We'd have to wait for it to come back down and test the neckline. And then that would be our entry confirmation. Generally, we like to use the patterns as an overlay, but say with even this channel here, same kind of thing applies. If this was the candle for the break, the risk reward wouldn't have made sense. We'd wait for it to come back down to this level. So I hope that answers that.
Yes, perfect. So another one would be, when you trade using scalping methods, do you use stop orders or market execution?
Another great question. I actually like using market execution for scalping. And the reason why is because you're probably going to be in front of the charts. The only time that can be different though, and this is a great example here, is if this was the confirmation, okay, and we knew it had already broken through and we were interested in picking it up more at this level, the confirmation's done. As soon as the confirmation's done, we could put our pending order here, pending buy, we could put our stop loss in, and then we could put our take profit in and literally walk away because we've already waited for the confirmation. And that's one way you can use pending orders, but I wouldn't just say set a pending order above the channel and leave it, because what's going to happen is this. You're going to get wicked, the market's going to come up, take you in, and then go all the way down, and then you're going to have a loss trade. So once the confirmation is confirmed, then you will be able to put in the pending order. Yeah.
Okay, perfect. Another one would be, on the cable, there's a possible double bottom setup on the day chart. Do you let Brexit worry you if you get a buy signal?
Do we let Brexit worry us? No.
Yes.
No. So it's obviously big news. It's been around for a bit, but we won't necessarily let any particular news other than maybe non-farms, payrolls in the US, stop us from trading a technical pattern. Price action is key. If a break happens, that break generally will have happened due to a fundamental event, especially from a key level. So you don't necessarily even need to look at the fundamentals because the confirmation has happened, the market's pushed it to that level, and that for a reason. If there is a massive news event like an election, like that day that Donald Trump was inaugurated or he became president, that was a big day in the market, and that was going to push the market each way because no one knew how to interpret the data. But if it's just a general kind of thing, we'll always wait for the confirmation and we can get involved, because every trade we're always going to have the same fixed stop loss. If we are risking 1% and that 1% is $100, then it doesn't matter whether it's a Brexit day or another day. The biggest loss we can probably take is going to be the $100, and the biggest gain is obviously whatever the risk reward is.
Yeah, and the thing also with this potential double bottom that we are seeing is, although on paper it is a double bottom, it doesn't really meet a lot of the rules that we like to apply for double bottoms, in that they're a little bit too wide apart. So we like double bottoms and double tops where the distance from the peak, or on a double bottom, the distance from the two troughs is actually no greater than the height of the peak. So these ones are getting a little bit wider. So that double top that we can see there is a perfect example. We like them nice and close because it gives us the ability for the market to really confine itself in that area, where when they come a little bit wider, It's not that they're any less significant, but we just don't like them because a little bit too much time has passed. And when we're looking at a daily chart like this one, especially around, we're not going to let Brexit worry us, but if news is going to upset a trade, it's going to happen when there is a significant distance. We're talking about nearly close on 4 months here, where this wide bottom. Can we just draw a marker there from?
Yeah, I've just tried to bring these
trough to
lines up
trough.
so you can see.
Yep.
So I've drawn that here.
That makes sense to everybody. See how the distance between the two troughs is actually bigger than the height from where the neckline would be to those troughs. Technically still a double bottom, but not one that would pass our test.
No, and we'd also be waiting for a while for this to break the intermediate trough. I mean, we'd have to wait for it to come back up into this level. So by that time, a lot of different things would have played out because it's obviously on the bigger time frame.
Perfect. Next one would be, do you think gold is still in a bear market, or does last few weeks make you think it has changed?
So gold obviously broke. Well, as traders, I mean, it's not really necessarily our opinion on what's going to happen. It's really what the market's telling us. So in this case, all we could tell you, and all we would usually tell you in terms of trading, is that this was a channel, the channel broke, and we expect it to go up to this level here. That's what we expected. In terms of where we think it's coming now, it could potentially come back down to this role reversal area. We'd be very keen at this area to potentially look for longs, and that would make technical sense. If we saw enough confirmation reasons, then we'd think it's long. So that's the kind of way that we like to approach the market.
We really trade what we see when it comes to gold. Difficult. We do trade what we see. Yeah, so it's not just gold. Like in all currency pairs and commodities and whatever we're looking at, really, whether if you do maintain a bias that it is in a particular direction, it does cut out a lot of trading opportunities that happen on the side. We've got to remember that for a lot of the time, every year, most of the movements are sideways. So it's not trending heavily most of the time anyway. So we really want to isolate those opportunities to trade inside the sideways markets as well as the trending markets. So even if it was in a big, strong bear market, I mean, the very long-term time frame would tell you that it probably is still in a bear market, but that wouldn't stop us from taking this long. Absolutely not.
No. And in terms of the way we might approach it is if we got into this trade here, we might scalp the bottom off here, as we said, then we might take the longer term position into these highs. And then potentially, because this is the role reversal, we might take off 75% of our trade and leave 25% for a higher point, because we know this is such a critical junction for gold. But we're not going to make big calls. We're just going to use the technicals.
All right. We have the last question. So are the channels drawn on the higher time frames and then used as a key levels on the lower 15 minutes chart?
Yeah, that's exactly right. It just gives us a bit of a bearing for where the market's trapped on the bigger time frames, and then we get involved on the smaller time frames. We look for channels inside the channel. We look for all of those kind of things. What it helps us do is it helps us make sure that we're not making mistakes with where we think the trade could go on the 15-minute. The worst thing we could be doing is we're looking at a 15-minute and we're at the top of this channel over here on the 4-hour, and we're saying, let's buy the market.
And go long. The worst mistake you could make, because the chances of that trade going long are very, very low in the shorter term. And if you're going for a very short and sharp scalp, if you're only going for 10 or 15 pips, the likelihood of your stop loss getting hit is extreme. And that's because you've got a very big barricade in front of you that you should have known you had there. And that's why it's really, really important to draw your lines on the bigger time frames and scalp accordingly on those. So definitely pay attention.
Yeah, absolutely. All right. Well, thank you very much, everybody, for coming out. Hopefully some of those things will help you in your scalping systems and trading methods. And hopefully it makes sense using the higher time frames as a point. We know it's different, but it'll help your scalping. Believe me, it really will. And if anyone's interested, of course, you can come out tomorrow, and we're going to be doing another one of these. So we'd love to see you. I
put the webinar link in the chat window. So if anybody's interested in joining us tomorrow night for a live session, we can just click on there and just register, and we'll see you at the same time tomorrow night.
Excellent. All right. Thanks, everybody. We'll see you next time, probably in 2 weeks to 3 weeks, and we love having you here. So it's great.
Great. Have a good night, guys, and thanks for joining us.
Excellent. See you guys.